Traders Corner. We're just going to be going back and kind of refreshing ourselves in terms of what we were looking at in terms of analysis on these indices. Again, we're starting to see a bit of movement, but we're seeing some movement to the upside, which isn't a bit surprising at all. But before we get into the actual technicals, looking at the charts themselves, I want to start off by looking at something else, which is called the Mcclellan Summation Index. This is basically what's called a market breadth indicator. Now, what's a market breadth indicator? Well, you might have heard in trading, and this is a very common thing to hear in trading, about the idea that the trend is your friend. Follow the trend. There's a lot of evidence and, back testing and all this kind of stuff to support that kind of idea, right? There's also some evidence to support the other side as well. So I don't think that there's any wrong way in terms of if you're a reversal trader or a trend trader. But if you're a trend trader, then it's not just important that, say, for example, the market is moving up or the market is moving down, but how is the market moving up? How is it moving down? And I don't mean just by looking at the chart, although you can sometimes see these things reflected in the chart. But generally what I mean is, by how is the market moving up, how is it moving down, is let's take, for example, the S&P. Well, Apple is a large part of the S&P, right? Well, because Apple is a large part of the S&P, if Apple moves up, then generally it'll drag the rest of the S&P up with it. So what you could do is, and that's maybe not the most representative thing of a strong trend on the S&P, right? Because one stock out of 500 does not a trend make, right, for the entire index. But if, let's say, 251 stocks out of 500 are moving up, then maybe that makes a better trend, right? That makes for more breadth in the trend. And that's essentially what the Mcclellan Summation Index shows you. Now, the actual Summation Index itself is just a derivative of what's called the Mcclellan Oscillator, which is just basically, just think about it as the difference between stocks making new highs and stocks making new lows on the day. So as we can see here, we can look at the Mcclellan Summation Index for the S&P 500. We see it's been trending down for some time now, and that trend down definitely comes in line with this trend down lower in the S&P. And even if we look at this sharp, I guess you would say, bear bounce or bullish bounce in a bearish trend that we saw come in, in that September-ish time. When is this? Let's just check on this. This happened, this is on the daily over there. So we're looking here. Yeah, so in that early September timeframe, early to mid-September timeframe, we saw here that even though the market was rallying higher, the Mcclellan Summation Index was not able to actually start pushing higher, right? And so as we got to this point, and the Summation Index was starting to actually fall back over, get back into that, that could have given you an early indication that there was no breadth in this push up higher, and that maybe that this was just a fake move or just a bull bounce in a bearish trend. So we'll look at the Summation Index on S&P. So looking at the S&P Summation Index, again, we can see that it's not only been trending down, but it's actually at its most negative point that it's ever been, right? So it's at negative 200. And we look at it for, again, we'll look at it for the Dow. Again, it's not at its most negative point that it's ever been, but it's very near it. And this is going all the way back into middle of March, probably, maybe beginning of April, probably more so middle to end of March lows. And it's at that negative 10 level on the Summation Index. So again, we have more stocks making lows than highs, right? And then again, the Nasdaq. So we're seeing the same thing. This one, we're not at the lows yet, but we're getting very near them, and we're getting very negative on the Summation Index, right? So that being said, if I start to see a bit of a push higher, which we can see here, right, especially for the day, we're seeing a bit of a push higher on the S&P. I know that maybe I should fade this move, right? And if I look down at the daily, okay, again, we're looking at these areas. We're looking at the daily, right? We're looking at this area here between here and where we're currently trading now, basically the bottom of where we're currently trading now, right? And we're looking to see, can we get a pullback up into this 50 level? That would be great. And if we get a pullback up into that 50 level, and again, you go out, check the Summation Index, and you see, okay, well, we're not seeing any positive breadth represented by the Summation Index, then I know maybe it's time to fake this move. And I keep saying maybe because I don't know for sure. It doesn't matter what the Summation Index tells me. It doesn't matter what the charts tell me. If somebody else in the market decides, or the market decides, or the algorithm decides that it's time to go up, it's time to tick higher, it's time to price higher, then that's it. It is time to price higher, and there's nothing that me as a retail trader can do to try to get out of the way of the train, right? So that's what we're looking at in terms of S&P. Again, we're just looking for that pullback. We're starting to see a bit of movement. We see here that we pushed lower to that 35 level, that 35-ish level that we identified before in the previous video, right? Again, represented by that fair value gap here, right? And this nice candle formation here as well before we push higher. Now, Nasdaq, basically the same thing. Again, we can look at the summation index for Nasdaq, right? Again, negative 3,000 at this point, despite this bullish move we've seen for the day, right? And again, like we identified last time on Nasdaq, that it would be a bit harder for us to identify maybe where is it trying to get down to, but the first area that we identified was here, right? Here, yep. And then again, dropping out of the daily, we drag on the SIP tool and we say to ourselves, okay, well, swing low to swing high, or swing high to swing low, right? And again, where's that 50 level? Well, we have it here, right? So we can see a bit of a pull up into this 50 level. Again, while the summation index is still, showing me more net lows than net highs, I'm interested, right? And then lastly speaking, we'll talk about the Dow Jones. So we see the Dow is actually tickling this level that we identified here for fair value gap, right? And I'm happy with that as well, because I'm never saying that my levels are like hard lines that have to be hit, but more so areas, right? And especially when we get into the indices where they make a lot larger moves, you know what I mean? Trying to call very, very, very specific price points is probably a bit above my pay grade at this point, but I can give you, some more refined areas than I think somebody who's just starting out might give me, right? And now again, we're looking at the summation index for Dow Jones. Again, we see negative, right? Negative, right? More new lows than new highs, right? Which makes sense in what we've been seeing in the market recently, right? And again, we're just looking for this pullback up into this 50 level. So not interested until we get that pullback up into this 50 level that we've talked about before. So I hope you guys enjoyed that. I hope you enjoyed that explanation, that very brief explanation about the Mcclellan summation index. If you're interested in that at all, definitely go check out, some more content, some more stuff on that. I've found it to be very powerful, and also maybe you don't like the summation index, but you like the idea of looking at market breadth. There's a lot of different ways that you can look at market breadth out there. So definitely go check those out. Hope you guys enjoyed this, man. Hope it provides some value to you. Enjoy us next time. Thank you.